Today, we're going to do the complete history of FTX. What happens, what happened, and what happens next. Tune in here at Token Metrics to get all the details about FTX and other crypto developments. Subscribe to our YouTube channel. Make sure you turn on alerts so you know when we're doing videos like this, price predictions, and when we're going live. And if you like this content, don't forget to hit the like button. Okay, so let's go over the complete history of the FTX debacle. To understand the FTX fiasco, it's helpful to understand the assets involved. FTX had its own crypto token, which it actually printed, just like a central bank. Boo. Alameda Research was a hedge fund that was a part of FTX that traded cryptocurrencies. If you look over here, when Terra Luna's stablecoin imploded, it blew up Alameda. And you're like, wait a minute. Didn't that occur in July and June? Yes, you're right. So Luna had a stablecoin that was backed by its own token and Bitcoin. Someone figured that out, short sold Terra Luna, short sold Bitcoin, and it started a cascade lower and Luna collapsed. So anybody that owned Luna or Luna's stablecoin lost everything in a day. And that is what blew up Alameda. Now, again, the Luna stablecoin was offering a 20% yield, which, should have been a red flag. And I'm sure Alameda was participating in that. When Terra Luna blew up, it blew up Alameda, but they didn't say anything about that. They hid it. So how did they hide it? They took customer funds deposited on FTX and loaned them to Alameda to keep Alameda solvent. Then they used more printed money to buy up all the bankrupt crypto entities, making Sam look like a hero when really all he was doing was doubling up on bad exposure and insolvent companies. So you're like, what? Are you saying he printed his own token to buy insolvent companies when he was insolvent? Yes, that's what I'm telling you. He printed money to hide the fact that his company and other companies blew up. Okay, ironically, FTX had been collaborating closely with the government to put crypto regulations in place. Not only that, but the staff at Alameda, right? Sam is 30. The rest of the staff was below 28 or below, many in their 20s. And they were all dating each other. So it's just this giant web of corruption. Now, how did it blow up? Because you're like, hey, wait a minute. One day, crypto is like range bound, bored, kind of a dull bear market winter action. The next thing you know, boom, the whole system's insolvent. How did that happen? This is a question I'm asking myself. 2 weeks ago, Coindesk got a hold of FTX's balance sheet and revealed how the FTT token was basically printed and given to Alameda as loans, which were used to buy other assets. Binance, the biggest crypto exchange, owned a lot of FTT tokens and became worried that FTX was like printing this token. So, and here was the shot heard around the world, and most likely, I would guess, an attempt for Binance to take out a competitor. Binance's CEO, known as CZ, decided to sell all of his FTT tokens and publicly announce his intent on Twitter and criticized SBF for his efforts to influence SEC regulations to benefit FTX. The selling of the FTT token exposed how vulnerable FTX was and started what they call a bank run, meaning everybody went to go get their money out of the bank or FTX at the same time, and FTX didn't have their money because they were using it elsewhere. So everybody pressed the withdrawal button and there was no money to withdraw. The same thing happened in 1929. And frankly, it would be the same thing if everybody went to withdraw their money out of whatever commercial bank you bank with. That bank would not have all of the money there. It's called fractional reserve banking, where they take your money and they loan it out. So it's not like your money is sitting as a big stack of cash in some vault. The difference is banks have a system of lending. They have the Fed. FTX had nothing. So when everybody went to pull their money out of FTX, it was gone. And FTX imploded in 48 hours. FTX's bankruptcy, that's about 10 to 14 billion. So that's what clients are going to lose, but it's much bigger than that. It's much bigger than that. The entanglement, as you see here in green, is extreme. The fallout may be so big that it spills over into general financial markets. As we peel back more detail about this, it is definitely, or there's a very strong likelihood that this is going to spill over into crypto banks. It could spill over into the company that owns Grayscale, which owns the GBTC ETN, or exchange traded note. And that system holds a huge amount of Bitcoin. So FTX goes bankrupt, and it's like a domino, right? One domino falls, and then all these players have to sell until like a legacy institution goes out of business. It seems like everyone knows it's coming. We're just waiting for the shoe to drop. And when that shoe drops, that's going to get the attention of the Treasury and the Fed, which is why crypto Twitter is pretty much depressed these days. The cure for FTX, or the lesson the crypto ecosystem is going to learn, is read the Bitcoin white paper. Read Satoshi's vision about decentralization. There's a lot of suspicion that SBF donated a lot of money to the Democratic Party. Then the Democrats sent a lot of money to Ukraine, and then a lot of that money was reinvested back into FTX. So if you can believe it, this actually extends into geopolitics. It's just a web of corruption. So let's sum it up. FTX goes bankrupt. That triggers selling and insolvency across more asset classes like crypto, stocks, banks, all these entities, leaving us with the lesson that the scammers, the people who run these things with no experience, can never run anything like this again. It can never happen again. And let's just hope it doesn't result in a crypto ice age. Matter of fact, my hope is that this results in the biggest V bottom ever, meaning the day we all figure out the extent of the contagion, the market goes straight down. Bitcoin goes straight down. And then after it goes straight down and the forced selling is over, it goes straight back up again. So that's the history of FTX and what we think might happen in the future. This is Bill Noble from Token Metrics. We'll see you next time.